What's happening with the US dollar, and why should you care?
Today we're highlighting expert insights from George Gammon, Stephan, and the analysts at Eurodollar University.
Our AI-powered summaries will distill these complex insights into minutes to help you stay informed.
Stay tuned as we dive into these significant topics, starting with George Gammon's take on the dollar surge. Remember, the content here is for educational purposes only and not investment advice.
Today we're reviewing George Gammon's insights on the surging US dollar and its significant impacts on global liquidity.
George highlights that the dollar is approaching critical thresholds that might pose challenges globally.
George Gammon notes that the dollar index has crossed 110 and is close to its 3-year high.
This surge raises concerns about potential instability in global markets as the dollar approaches 120.
According to George, the surging dollar is constraining liquidity in international markets, particularly in emerging economies.
He emphasizes that nations such as Indonesia are reacting by pledging to defend their currencies against the dollar's strength.
George points out that decreased dollar liquidity could heighten financial risks worldwide.
He mentions that as investors seek safer assets, the overall supply of dollars diminishes, putting pressure on global economies.
George asserts that while the dollar's rise may hinder U.S. corporate profits, this perspective fails to address the larger impact on global liquidity.
He points out the significance of dollar-denominated debt and its repercussions on international trade.
Looking ahead, George predicts that sustained dollar growth could lead to severe economic ramifications for vulnerable economies.
He advises investors to remain vigilant about risks stemming from these currency movements.
George concludes that investors must closely monitor the dollar's influence on global liquidity and market stability.
He encourages a proactive approach to financial strategies to mitigate risks from rising dollar valuations.
In today's video, Graham reflects on his experience with Bankroll Coffee and the lessons learned from its shutdown.
He talks about the difficulty of scaling a coffee business amidst rising costs and competition.
Graham shares that despite Bankroll Coffee's initial success, rising shipping and coffee prices undermined profitability.
He explains that competition is fierce, making it difficult to maintain the business model without constant promotion. Graham identifies that rising advertising costs turned growth unsustainable, as effective strategies faltered in profitability.
He realized that depending heavily on his personal brand limited the scalability of the business. For his investing strategies for 2025, Graham plans to maintain his dollar-cost averaging approach.
He stresses the importance of diversifying, recommending an international index fund to hedge against market volatility.
Graham reveals an exciting opportunity in real estate through accessory dwelling units, emphasizing their profitability with little initial investment.
He highlights California's favorable permitting laws, making entry into this market more accessible.
When discussing market expectations for 2025, Graham acknowledges unpredictability and reaffirms a consistent investment strategy regardless of market volatility.
His investment approach remains focused on long-term growth through research-driven decisions.
In conclusion, Graham emphasizes the importance of simplicity in effective business strategies and adapting to changing circumstances.
He reiterates the value of building genuine connections, which can lead to unexpected opportunities and collaborations.
Today, we're examining the alarming analysis from Recession Consulting regarding the collapse in homebuyer demand.
Recession highlights a staggering drop in mortgage applications, indicating a severe downturn in the housing market.
Recession Consulting reports a significant decline in buyer demand, with mortgage applications falling dramatically.
They also indicate that prices are falling in many states, which is unprecedented. Recession notes that Americans now need an annual income of $110,000 to qualify for a mortgage, an unprecedented cost level.
This indicates the current state of home prices is significantly concerning, reflecting a historical bubble. According to Recession, the Federal Reserve projected that rate cuts would make housing more affordable, but that has not happened.
This has resulted in mortgage rates hovering around 7%, further hindering buyer demand. Surveys show that a significant majority, 78%, believe it's a bad time to buy a home.
This negative sentiment is correlated to high housing prices. Recession Consulting predicts mortgage rates will likely remain high, potentially between 6.5 and 7.5% through 2025.
Buyers should not expect significant relief in mortgage costs anytime soon.
Reventure emphasizes that potential buyers need to manage their budgets carefully given the current market conditions.
They recommend considering a wait-and-see approach to capitalize on potential price corrections in the market.
Today, we're diving into the analysis of the financial crisis in China as presented by Eurodollar University.
The discussion highlights that the credit crisis in China may be evolving into a liquidity crisis.
The Eurodollar University analyst points out that China's banking sector is heavily constrained due to bad loans.
This situation raises serious concerns regarding the solvency of these banks.
According to the analysis, the recent liquidity injections by the PBOC haven't calmed the market effectively.
Banks are reported to be hoarding cash, reflecting increased financial uncertainty.
The analyst warns that the yuan is approaching its official limit, raising concerns about its valuation.
Speculators are increasingly targeting the yuan, which adds further downward pressure.
Looking ahead, the analyst predicts that liquidity issues may persist beyond the holiday season.
Failure to address these difficulties could lead to significant disruptions in Chinese financial markets.
As noted by the Eurodollar University analyst, paying attention to liquidity and banking stability is crucial.
Investors are advised to stay cautious while closely monitoring these developments.
Today, we're delving into insights from Mark Anderson, co-head of Global Asset Allocation at UBS, regarding the implications of the recent CPI report on the market.
Anderson highlights that today's CPI reading could shift investor sentiment positively, suggesting a potential path for the Fed to begin cutting rates.
According to Mark Anderson, the CPI increase could allow for the Fed to cut rates, which would be a welcomed relief for investors.
However, he cautions that strong inflation persists, leading to a complex outlook on interest rates. Anderson believes the bond market will perform well, but warns that new administration policies could create volatility.
Despite optimism, ongoing inflation and commodity price increases could dampen recovery, according to Anderson.
Anderson points out that housing prices may be unsustainably high, urging investors to evaluate their strategies as market conditions evolve.
What implications do Anderson's forecasts have for upcoming interest rate decisions?
Anderson predicts the Fed could cut rates twice this year, potentially in June and September, based on economic performance.
In conclusion, Anderson advises investors to stay alert on Fed moves and inflation trends.
By remaining informed and adapting strategies, investors can navigate the complexities of the current market.
What a powerful mix of insights and challenges our experts have shared today.
Indeed, each guest brought their own unique take on the current financial landscape.
Mark Anderson highlighted how the latest CPI could bring some relief for investors. That's a silver lining.
True, but Eurodollar University's analyst painted a stark picture of China's economic transition. A liquidity crisis sounds alarming.
And then there's Reventure Consulting, showing homebuyer demand has hit rock bottom. What a dramatic drop.
Right? It's fascinating to see how markets react differently based on local and global pressures.
And Stephan brought a personal touch with his experience shutting down bankroll coffee.
Exactly. His shift towards fewer projects echoes George Gammon's caution about necessary diversifications.
So much to ponder. If you found these perspectives as enlightening as I did, hit that like button and subscribe.
Your support helps us continue providing you with deep dives into financial insights.
And don't miss our upcoming video on global trade dynamics. It's bound to be just as revealing.
Thank you for joining us today. Until next time, keep questioning and investing wisely.